This is not a ticker that is likely to go up soon. Can it go up? Of course it can. Look at Carvana here, a similar chart that had an insane recovery. But for every Carvana, I can show you 50 other dead charts that didn't bounce like this one. Trading is about what is likely to happen, not what can happen. So the first rule for picking stocks to trade is that the stock must be strong. And as returning viewers to this video will know, what we do on this channel is we objectify rule sets for our trade strategies, because you can't just say the stock has to be strong. You have to quantify that. You have to be able to scan for that. There needs to be a real reason behind your rules. So for us, how we're going to define that a stock is strong is that it is above the 200 length simple moving average on its daily chart. When above this, the stock is strong and we can be looking for longs on it. When below this, just leave it alone. Go look for longs on something else instead. Rule number 2 is where we can begin to customize based on our personal trading goals. Are you after a high win percentage or a high risk reward? Now, I would love to be able to sit here and give you a strategy that has both of those things, but unfortunately, it doesn't exist. There's no such thing as a strategy that consistently, like over a multi-year time frame, is going to give you a 75% win rate at 3-to-1 risk reward. Trading just doesn't work that way. In trading, your battle is between that seesaw of win percentage and risk reward, and you are just aiming to find a little edge against the risk on one of those sides. If your main trading goal is a high win percentage, then you want to be trading a reversal strategy. I am running my current reversal trading strategy on the chart behind my head here, as well as my custom coded backtest data so that you can see the win percentage and the average win versus average loss. Now, of course, you'll notice on this strategy, of course, above the 200 simple moving average, the stock is strong. We are looking to buy dips and then really get out on the first sign of strength. This provides us with an 83% win percentage here on NVIDIA, but as you can see, average win, $870. Average loss, $1,850. Once again, that is profitable at an 83% win rate because we are playing that battle of the seesaw. Our win percentage is high enough that it offsets this bad risk reward to make us money over time. Clicking through a couple of other names here, Tesla, actually insane, 97% win rate, but average win $1,000, average loss roughly $2,000. Go to something like Apple, win percentage over 84%, average win $519, average loss $1,100. You get the idea of the reversal strategy. High win rate, low risk reward. Now, if your goal is a high risk reward ratio, then you want to be trading a very different type of trade strategy. You want to be trading a continuation strategy instead. As you can see now, we are buying into local strength above the 200 simple moving average, and then we are holding and letting that strength play out, exiting on the first sign of weakness. You'll look up at the statistics. Once again, this is on NVIDIA. We are now only at a 43% win rate. You're going to lose more trades than you win with a strategy like this. However, look at the risk reward now. Average win, $5,800. Average loss, only $1,800. What was some other stocks we looked at with the previous strategy? Tesla, win percentage is only 39%. You tell someone your win percentage is 39%, they're going to probably clown you if they don't know anything about trading. Remember, profitable trading, win percentage times risk reward. And once again, you play that seesaw battle between those two to find your edge in this game, because now on Tesla at a 39% win rate, we're up over $200,000 because our average win is $11,600. Our average loss is only $1,700. We also looked at Apple with the previous strategy, so let's just load that in again. 47% win rate, $3,400 average win, $1,500 average loss. So once again, you see the difference in the continuation strategy versus the reversal strategy and how you want to apply those to your goal in trading, be it win percentage or be it risk reward. And I'm going to tell you the rule to quantify both of these trade styles in just a second, but I want to touch on one quick thing first. What I do, I trade both of these strategies. Both of them obviously have their downsides. With this continuation strategy, you're going to lose more trades than you win. So you can go through very cold streaks. I mean, I've lost 10, 15 trades in a row trading a continuation strategy like this. With the reversal strategy, you're going to win way more often. However, when you lose, you can get smacked. So the best way to even out that P&L, to be consistently up and to the right, is to trade both trade styles so that they help to average out each other's cons. All right, let me come off of my own personal monologue and move into now rule number 2 for selecting stocks to trade. Hopefully you guys do sort of enjoy those conversations, though. I like to inject what I've learned over my last 9 years of trading to you all. So hopefully you do enjoy that. But let's go ahead and hop into rule number 2. And remember, this is going to be different based off of whether you want win percentage or risk reward. I utilize the RSI. This is how I determine local strength of stock. And of course, if I'm going after a reversal strategy, if I want a high win percentage, I am looking for a lower RSI. So something like the stock is above the 200 simple moving average and below 40 on the RSI, that is when I would be looking to enter and of course, looking to exit on first sign of strength. But if I would rather have a high risk reward and a low win percentage, I'll be looking for continuation. So looking for local strength. Both above the 200 simple moving average, the stock is macro strong, and something like above 60 on the RSI, I will look to enter then, and I will have the outlook of a much longer hold exiting on the first sign of weakness instead. Now we're going to hop into the scanner and we're going to build a couple together so that I can show you exactly how this looks. But first, there is a third rule for deciding which stocks you should trade, and that is market cap. In my scans, I set my market cap to a minimum of 500 million. I only want to be trading large cap stocks. What I have found, once again, in my 9-year trading career is that large cap stocks give you much more consistent moves. They're much more easy to read. Your win percentage on large cap stocks is going to be greater. However, if you wanted to set it to something like only looking at stocks with a max of $30 million market cap, so you're looking at small cap stocks, they're going to be much more jumpy. Of course, the supply is lower, so it takes less demand to move them around. So they're going to be a little harder to read. It's going to drop your win percentage. However, because it takes less demand to move them, your average win and average loss are going to be much greater. So your trade swings are going to be much greater. You can make more money on a stock like this. Remember, whenever you can make more money, it also means you can lose more money. So what I do, once again, I go for the consistent win rate route of setting my minimum market cap to 500 million, but it's once again up to your trading goals. Are you in for a higher win percentage, or are you in for bigger swings in each and every trade you take? That's got to be made up by you. So let's go ahead now and let's build out our first scanner based on our rules. I'm going to set my market cap to a minimum of 500 million, as I typically do. Then I'm going to come in and I'm going to add a study filter. Clicking on the pencil here, we can come into the condition wizard, and this is where we can begin to work. What I'm going to say is that the closing price is greater than, and I'm going to go into studies, and I'm going to look up the simple moving average. The closing price is greater than the 200 length simple moving average on the daily chart. Go ahead and save that. Go ahead and hit OK and apply it. Now, only stocks, once again, trading greater than $1 and with a minimum market cap of 500 million, trading above their 200 moving average are going to show in these results. We've got S-O-U-N, Trey, not M. Wow, what? Okay, this stock is flying. Hello. We've got American Airlines, et cetera, et cetera. Every one of these stocks will be above the 200 simple moving average. Now, of course, is when we need to add our RSI condition so that we can determine local strength. And this is, of course, going to differ, once again, based on your personal trade goals. So I'm going to add another study filter back into the pencil, back into the condition editor. We are now going to look up the RSI study on this left side. Now, what I'm going to do here, instead of just saying greater than or less than, I'm going to use the comparative function of crosses below or crosses above. That means that only stocks that are making this cross on the RSI today on the current candle will show on this scanner. What that's going to do is it's going to give you a resulting list of stocks that are matching one of your entrant setups today, rather than one, that crossed below the 40 RSI 2 weeks ago and just happens to still be down there. You probably don't want to still look to enter that if it did it that long ago. So let's go ahead and set up our high win percentage scanner first. We're going to go ahead and use RSI crosses below, and I'm going to use just a value of 40 here. So if we go ahead and add this to our scanner, go ahead and run this scan, we should now see stocks once again above the 200 simple moving average with a large market cap and currently today crossing below 40 on the RSI. The first stock on this list is FI. Go ahead and pull up FI. This is, of course, a very macro strong stock. Good to see. That is getting a large dip today. Today, RSI is at 39, whereas yesterday, the RSI was at 58. So yes, today, it is getting that crosses below 40 on the RSI. The next stock is NCNO. Looks like another stock on a massive dip. Looks like a couple of news plays here. But yes, once again, macro strong, currently getting the pullback today. Can I find a little bit more of like a normal move, not one getting crushed? This one looks fine. TXN. This is a macro strong stock, currently on a multi-day dip. Just today, crossed below 40 on the RSI value. Of course, then if you are instead chasing a high risk reward, you would come in and instead of RSI crosses below 40, you could do something like RSI crosses above 60. Right now, I'm sort of just pulling these values out of a hat, by the way. Of course, what you would do is you would test these strategies. You would find which value works exactly right for you, and you would plug that in instead. I have found 40 and 60 to work relatively well with my strategy, so I'm just kind of pulling those once again out of the hat. But make sure you test your own strategies. Don't just use the exact same numbers I'm using. Maybe you want to use a different length SMA too, right? You have to test it yourself. You have to prove it yourself. I'm not telling you to go buy stocks that match what we're making today. This is for education, teaching you how to set it up yourself. Anyway, first stock on this list is actually Rivian. Is Rivian bouncing? The stock's been really weak for a long time, but yes, currently getting a decent little bounce. I mean, just bounced from sub $10 to over $12, got above the 200 simple moving average, and the RSI has crossed above 60 today. Next stock on this scanner, APLD. Go look at this stock. Of course, macro strong and locally strong and getting that crosses above the 60 today as it's coming off of a little dip. So nice move there, potentially looking for some continuation. The third and final one we'll look at just to confirm the scanner is working, ABEV, above the 200 simple moving average on a nice bounce from $2 up to $2.35. And local RSI just crossed above 60 today because of the dip it got yesterday. If you guys are interested in this sort of codified trading and you need to be, listen, I'm not telling you need to sign up to my site, but you need to be interested in this sort of codified trading, in objectifying your reasons for entrance and exit like we covered today. I have published over 75 of my own custom coded trade strategies, trade scanners, and even some custom studies over on my website, daytradingstrategies.net. There'll be a link in the description down below. Go click on that, click on our codes, get signed up today. They are very easy to import. All you have to do is copy and paste a URL, and you can have the code in your own Thinkorswim. Of course, if you would like to learn how to code yourself, I also have a course available over on my site. So feel free to check that out as well if you're into learning how to make your own stuff. I think we've learned a lot today. Not only did you learn 3 rules for picking stocks, but you also learned about the difference in trade strategies and how you should be targeting those differences based on your trading goals. And then you even got to see firsthand how you can build some trade scanners in Thinkorswim in order to find these stocks that match your goals. Hit like if you learned something. Make sure you're subscribed if you would like to continue learning. With all that being said, I'll catch you all in the next one.